What's going on, my good old friends of YouTube? It's Stas here. Welcome back to another video. So the markets did not have the best day today. The S&P went down 0.3%, the Dow and the Russell went down 0.7%, and we had the Nasdaq 100 barely hit a green day, up 0.1%. So today we're going to break down some stocks, some charts, my thoughts on the markets, and overall where my head is at as a trader, as an investor. So sit back, relax, get your 2 stocks from Webull down below, your $50 from M1 Finance, and check out my Patreon if you want all my real-time buys, sells, call-outs, morning update videos, private Discord access, and more. All of that's on Patreon, link down below. And with that being said, let's get right into the video. So today we pulled back. Like I said, overall, it was a red day. We had the VIX up over 10%, so there was a lot of volatility in the markets today. And if I pull up the 20-day chart on SPY here, we're hanging on by a thread above that 180 moving average. Actually, it looks like we closed a little bit under it. So this is not a good sign for the bulls overall, and it's a sign that there could be more downside. And we covered the bearish divergence last week. If you guys watched my videos, which you have to watch the videos because we're breaking this stuff down every day, so make sure to subscribe. We covered the clear-cut bearish divergence here on the 20-day chart when it comes to SPY. And it seems like ever since we did that, the markets have been seeing weakness. And now that we closed ever so slightly under that 180 SMA on this 20-day chart, we could be going down to 449 on SPY. If that were to break, we might be going down to 445, 446, which was the low point from the end of August. And if that were to break, maybe we start pushing down low 440s, maybe mid 430s. But let's not get ahead of ourselves because we're not seeing a huge amount of selling pressure just yet, but it could be the start of that, right? And you're noticing on QQQ, which, like I said, just inched out a green day today, this one is not trading under the moving averages on the 20-day chart. In fact, it's above both moving averages, both the 50 and the 180. So this one's looking a bit more bullish, to be honest with you all. And it doesn't take a rocket scientist to tell you that. So I'm going to be looking at 380. 380 is a big price point on QQQ. It's right by that 50 moving average and the 180 moving average as well here. And if we start breaching under that, let's say we start pushing mid 370s, that is where we might start getting some selling pressure to maybe 375. Maybe 370, right? Which was the high point from the middle of August. And in my video earlier today, we discussed how Goldman Sachs has cut the GDP forecast twice over the past month due to the Delta variant, the rise in cases, all of the crazy stuff that's been going on. And somebody left me a very good comment that I don't know why I didn't think about saying this in the video, but it makes complete sense. Somebody said how if this Delta variant continues running rampant, which it very well could, if the economy takes a hit, although that sounds bad on paper, it might end up being good for the stock market. And hear me out. Hear me out on this one, because if the economy is being hurt, what is the Federal Reserve going to do? They're going to prolong this fiscal stimulus. They might ease off on the taper. They might keep interest rates at zero longer, which we know that is good for the stock market. So even though the Delta is bad for the economy, that doesn't take a crazy scientist to tell you that. We all know that. It's going to be good when it comes down to the Federal Reserve's actions for the stock market, if that makes any sense. Because we all know with interest rates at zero, quantitative easing, the bond purchases every month, this keeps the stock market propped up. So we could continue running along even with the economy being torn to shreds by the Delta, which I don't think it's going to get that bad, but that is another perspective to look at this from. And shout out to you for leaving me that comment. It got me thinking, and you're completely right on that. So I figured let me shout it out and talk a little bit about it in this video, which we just did. And I'd love to know your thoughts on that down below in the comments. Please, 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 guys, let me know. I love talking to you all down there. And make sure to smash that like button if you haven't done so already. If you all enjoy the videos, it helps me out in the YouTube algorithm, and it lets me know that you guys actually enjoy watching this content. So let's get into some stocks now. We also saw crypto. Gosh, today was one of the bloodiest crypto days I have seen in a long time. Probably not ever. I mean, I think I've definitely seen worse, but in recent memory, today's sell-off was probably the worst in recent memory. And let me pull up my phone very quickly. Last time I checked, about an hour or two ago, the crypto market was down about 11%. And if you're on Coinbase, it shows you overall how much the crypto market is down. Oh my gosh, now it's down 13%. I'm not sure if you guys can see this. Look at the screen right now. Hold up. Let's see if I can get that on there. 13% the crypto market is down. And by the way, if you guys want $10 from Coinbase, check out my link down below. We each get $10 of Bitcoin if you sign up, I believe, and deposit $100. Check it out. Right now, Bitcoin's down 11%. Ethereum's down 14%. Cardano's down 15%. Binance Coin, which I'm not even sure, is that one of the most popular coins now? I guess it is. Binance Coin's down 17%. XRP's down 22%. Dogecoin is down 18%. Polkadot's down 21%. Uniswap's down almost 20%. Chainlink, 22%. You guys get the point. Pretty much all of these coins are in bear markets just today. And that is the real risk of speculating on crypto, right? That's the real risk of putting money into these coins. They could go down like that in the snap of a finger. Literally, you see flash crashes all the time. And if you're in the crypto market, this is normal. I mean, this is nothing out of the ordinary. It happens all the time. Maybe not all the time, but it's more of a normal thing than the stock market going down 20% in a day or 15% in a day. That is crazy in the stock market, but for crypto, it's very normal. So I want to take a look at some of these crypto-oriented stocks. Number one is Mara. Well, we're really only going to talk about one today. Mara, Marathon Digital Holdings, which went down about 9% just today, which is really nothing compared to what the overall market or some of these other coins went down just today. So this is one that got a bit overheated. You know, we broke out of $39. We filled the gap all the way to 45, which if you guys have been watching my channel, we called out these gaps, you know, they ended up filling. And take a look at this. Hit 45, which was that oversold, or rather overbought spot. 45 was resistance in the middle of March. We hit that point, and now we sold right back down to 38.39, which was resistance a couple of weeks ago, 2 weeks ago. But now it seems like it is holding as support, and it's right by that 50 moving average here on the 4-hour chart. So maybe this goes lower. I'm not sure. I mean, I wish I knew what was going to happen. But you have to realize with the markets, crypto markets being very volatile right now, and they're selling off like crazy as we're making this video, this could go lower. So don't be surprised if Mara went down to $35, maybe low 30s towards that 180 moving average, which is at 32. That's definitely possible. In fact, that very well could happen. You know, very well could happen. We bounced off that 180 moving average about 2 weeks ago, 2.5 weeks ago on the 18th of August. So that could be where we go to. But let's say we get a quick V-shaped recovery in crypto at some point this week, which is also possible. Expect Mara to bounce right off $40. You know, I think that's possible, very possible. And, you know, we might fill the gap back to 45. So this could be a dip buy. It very well could be. Now, am I buying this? No, not yet. I kind of want to give it some wiggle room, but I'm definitely keeping it at the top of my watch list. And I already own Coinbase, which is also a crypto play here in the stock market. I personally love Coinbase. I just shouted it out a couple minutes ago. I mean, I personally use Coinbase. I invest in them. I have money in the stock. My money's where my mouth is. And this went down 4%. So this could also be a play if you're looking to buy it here off that 50 moving average. If it slowly starts breaking back over 270, this could fill the gap back to 280, 285, which is where it literally was earlier in the pre-market today. The stock did go down about 11, 12 bucks just today. Actually, no, that's wrong. Wait a second. Holy crap, was Coinbase... Whoa, look at that, guys. I didn't even realize that. Coinbase was 288 in the pre-market just today, and it went all the way to 262. So it dropped almost 30 bucks on the day from top to bottom. That was roughly an 8% loss. That's crazy. So, yeah, look for buyers to step in at 268, 270 on Coinbase to push it back up to the 280s. I think that's possible. Wynn Resorts is another one, which if you guys were looking at a lot of these, I don't know, the casino plays, the hotel plays, Wynn Resorts crushed it. I think Caesars was doing very well today. I think CZR is the ticker on that. Yeah, Caesars Entertainment went up 3.4% today. What else? MGM, I don't think that one did well. No, it did. It went up 2% today. So these plays did very well. Same with DraftKings, was up 4.2%. Gosh, I wish I held on to my DraftKings. But it's all good, guys, because like I always say, profit is profit. Penn also crushed it, PENN. This one up about 4% today, but I want to focus on Wynn Resorts. I'm seeing a nice breakout here. We're moving above both moving averages. We're about to see a golden cross, the 50 crossing above the 180 SMA here very soon. That's about to happen, no joke, by the looks of it here. And I'm also on top of that seeing a bullish divergence on Wynn. Notice how the stock has been weakening. Well, not anymore. Up until the middle towards the end of August, it was weakening. Then we saw that nice V-shaped recovery from 87 to now over 100. It was weakening as the RSI was strengthening. So it's literally the opposite of what's happening with the S&P 500. And this would have been a lot better to buy into, obviously, about 10 days to 14 days ago when the bullish divergence started to form. But we missed it. I'll be honest, I missed it. Maybe you didn't miss it. I don't know. If you're in Wynn, drop me a comment down below. But I think there could be more upside even from here, from $107. I think the next main target on Wynn, and I'm not sure if it's going to get there this week. Quite frankly, I doubt it gets there this week, but at some point over the next couple of weeks, month, 2-3 months, I could see Wynn Resorts recovering to 120, which was support all throughout, the middle of March, April, May a little bit, even in June, early July. So I think that is where we're headed. And I'm not going to be ignorant to the fact that we'll see choppiness from now until we get to 120, because we will probably see choppiness, but ultimately 120 is where we're going to be going, in my personal opinion, of course. And you guys, as always, must do your own research. Please, please, please do your own research before buying any stocks. That is super important. And Moderna, mRNA, continues cruising along and went up 5% today, up almost $20 per share. And we're clearly now breaking out. I mean, we called this one out at 370 as it was bouncing off the 180 moving average. We saw it at 390 as it pushed above the 50 moving average. And this is one of those stocks, and this happens a lot. If you run a YouTube channel talking about a bunch of stocks every day, it's not possible. It literally is impossible to buy every stock you talk about. There's going to be stocks you call out, they look good, and you don't take the trade. And this is one of them. I should have took the trade last week, but I didn't. But if one of you guys did, again, drop me a comment, and I'm happy you made money at least. And now we're fully breaking out. We took out the 415 level. If I zoom in a bit, actually, let's pop up this 20-day chart. You guys can see 415, that was resistance pretty much all of the second half of August, even in the beginning of September a bit. And today we had a nice push out of 415. We closed at 435, which is awesome. 436 actually. So if we end up seeing maybe a mini pullback on Moderna, maybe down to about 420, 425, maybe we could catch that dip on the upside momentum, upwards momentum. And we're also seeing a golden cross here, which is great. So this one looks like it has more juice left, believe it or not. Probably towards the mid-high 400s. I mean, that's kind of what it's looking like. We also had Chinese stocks today crush it. JD.com did very well, up 4%. I personally don't own JD, but I do own Alibaba. This one up about 3% today. My average cost on Alibaba is roughly 185, 186. So we're getting back up to my average cost on this, and it's a longer-term position for me, so I couldn't care less what it does now. I'm buying it for the next 3 to 5 years, so I'd love to build a position in the mid-$100, high $100 level, which I've successfully done so in Alibaba, again, with my average cost being 185. And if it gets lower again to the 150s, heck, if it takes the lows out even of 150, goes to 140, 130, I'm going to be buying more and more and more Alibaba, because again, I'm looking at this from a 3 to 5 year perspective. I think, in my opinion, from my research, don't just blindly buy this because I'm about to say this, but I think this is a no-brainer 2x from here at least. And who knows? I could be wrong. I could lose everything, which I've accounted for that risk. But I truly believe Alibaba could 2x from here at least in the next 3 to 5 years, which is why I'm buying it hand over fist, quite honestly. And JD is one that I don't own, but I'm looking more at it from a trading perspective, especially now that we broke into 80, the $80 territory, which I actually talked about in a video, I believe last week or maybe the week before. I talked about how if JD were to break 79.80, which was resistance literally for the past couple of months, end of April, early June, early July even, end of August, we struggled at about 79.80. I told you all, if it breaks out of there, the next gap to fill is 85.86, the high point from the beginning of April. And if that were to break, now we're talking a full breakout, maybe back to $90, $95 plus. So, yeah, I mean, it seems like JD is the most bullish one when it comes down to the chart out of pretty much all the Chinese stocks I look at. Let's look at some other ones. Baidu, this one's trying to peak above the moving averages, but it doesn't look as good as JD. Tencent, TCEHY, let's see that one. It's trying to break out of the main moving average as well. What other ones do we have here? Tencent, JD, Baidu, Alibaba. I'm forgetting the other Chinese stocks, but overall, JD is looking the most bullish in the short term. Disney is on its way to being very bullish. This one up about 2% today. It broke above the moving averages recently. We're noticing a golden cross as well, which I can't complain seeing that. That's very good in my opinion. But now we're approaching 185 to 190, which, if you guys pay attention to the chart, you'll notice Disney has not broken that level for many months, ever since the beginning of April. We've been under 190. So we got to break out of 190. That's the bottom line here, 185, 190. So I'm going to put 2 alerts on Disney, one at, you guessed it, 185, and the other one is, you also guessed it, 190, right? So keep your eyes on Disney. I'm personally long. My average is in the 150s, I believe. So this is one that I personally own, and I don't plan on selling, and I think if it starts breaking 185, 190, I might even take a swing trade in this particular stock, as from there, I think it could start moving up towards 205, 200 at least. So keep your eyes on Disney. AMC, I'm seeing a clean cut ascending triangle. I almost forgot what the pattern was called there for a second. But on AMC, clear-cut ascending triangle here on the 4-hour. You guys can see we've been uptrending ever since the beginning of August, so over a month at this point. And we've seen clear resistance since the end of August at about $48, including today. We closed right under $48 per share. So I think the ascending triangle could play out ultimately this week, maybe even, probably even tomorrow. You know, it's definitely possible. And you guys know when ascending triangles play out, you see a huge leg up. And in this case, we might be going mid-50s, low 50s, high 50s even. So keep your eyes on AMC. I'm definitely going to set an alert at 48. Let's put it at 48.50 for the sake of this video. I'll be watching it pre-market as well to see what happens. And if you guys join my Patreon, I actually make a pre-market video every single morning for all you guys out there that sign up for the top tier. So if that sounds interesting and you want my buys, my sells, my call-outs, all that stuff real time, check out my Patreon, linked right down below, and shoot me an email at stas@stassurfs.com if you guys have any questions on that. And the last stock here is 3M, ticker symbol MMN. This one has been collapsing the past day or two. Trading day or two at least, because the market was closed yesterday, but it's been ugly. You know, even the past couple of weeks, 3M has been crashing, and you guys notice here it's trading under the moving averages. It's very oversold. It's kind of like a falling knife as well, and this is not the typical setup that I like looking at, but I'm not completely throwing it out the window because I think we could end up seeing a relief rally here. So just watch 3M at the bottom of this downwards channel at about 180, 185. Maybe buy or step in here to push it back up to the low to mid 190s, you know, which was support throughout the middle towards the end of August, early September. So that could be where we do see a relief rally on 3M. So overall, guys, that's it. I hope you all enjoyed the video. If you did, smash the like button. It really helps me out. Subscribe to the channel as well and hit that notification bell. And let me know your thoughts in the comments. And check out my Patreon if you guys want the morning update video, real-time buy, sells, and call-outs, options moves I'm making, buying calls, selling calls, literally everything I'm doing. All of that's on Patreon, link down below. And you guys can get your $50 from M1 Finance, which runs out in the next couple of days. Your 2 stocks from Webull up to $1,600. Check those out, link down below. And make sure to check out my video from earlier if you want more insight on Goldman Sachs cutting the GDP forecast twice in the past month. And check out my video from yesterday if you want to see how to sell covered calls for beginners. It's an 18-minute video. We go in depth on covered calls, how I trade them, how I use them. So check that video out. I'll pop it up here. I'll catch you guys there. Thanks for watching again. As always, keep crushing the market. Stay safe out there. As always, peace out, guys.